Hello students, today I would like to welcome you all to this video. In this video, today we are going to learn about the books of prime entry. So the books of prime entry is the books in which we record the day by day entries. So these are the first books in which we record the entries, the transactions. So the process that we have is the recording of the business transactions is start from the business documents. So it's moved towards the next step that we have is to record in the books of prime entries. So I will write the transaction recording process here. So it starts from the business documents that we have, invoice, credit note, and the other documents, receipts that we learned in the previous video. So from this business documents we record the entries in the books of prime entry. In the books of prime entry, we also name them the daybooks. So we also call the daybooks. So daybooks is the second name of these books of prime entries. So from this we record the transaction into the ledger accounts, the T accounts that we made, and from this ledger accounts we make trial balance, and from this trial balance we make financial statements, means the income statement and statement of financial position, statement of financial position. The short form of this is SOFP. That's the new name of balance sheet. And in the income statement, the old name of this income statement is profit and loss account. So how do we make transactions in the books of prime entry, and how many day books, means the books of prime entry, do we have? So in O-levels and IGCSE syllabus we do have, there are 6 day books that we have, 7 day books, sorry. So the first one that we have is the cash book. That's on number 1. We already learned how to make cash book. The second one is the petty cash book. So that's another day book. It's not necessary that every business make petty cash book, but most of the companies they do make petty cash book, so to record the small transactions. So the next one we have is sales journal, or we named it sales daybook, in which we record only credit sales entries, means the transactions that we made on credit, the sales that we made on credit, we record only in this daybook. The second one the fourth one we have is purchase journal, or daybook, purchase daybook or purchase journal. In this book we only record credit purchases, purchase entries. So that's the only thing that we record in this daybook. The fifth one we have is sales returns daybook or journal, in which we record only sales returns entries. The old name of this sales return was return inwards, so in some books they're still using this return inwards name. So the sixth one is purchase returns journal or daybook, in which we record only purchase return entries. So the last one we have is the seventh one, that is journal, in which we record all the double entries of the transactions, of the business transactions. So these are the main daybooks that we have. We already learned about cash book is to record cash transactions, cash or bank, as we already know that we can record bank transactions here as well. So, and discounts as well, the three column cash book. The petty cash book is to record small cash expenses. So this is another daybook. So how do we make these daybooks? So let me show you the performer of the daybook. We already learned about the cash book. We already know the format of petty cash book. I'm going to write down the sales or purchase journal. So all of these daybooks, sales, purchases or returns books, means sales return or purchase return daybooks, they have similar format. So in the format, what do we have? We have date or serial number here. It's a single entry daybooks, so we are not going to make debit or credit. So we can write down the name of the customer or supplier. If we are going to make sales daybooks, we'll write down the name of customer. If we are going to make the purchases daybook, so that will be our supplier name. Same concept will apply in the sales return and purchase return thing. So the next is we have the amount column. That is not the debit column. We have witnessed some question in the Cambridge. They have given the two columns, so it gives by the means that some of the students, they may use the concept of crediting it. So we'll have a look on that as well. So we have here, so the first column is date and the name and the amount column. So if, let's suppose, if we are going to make some credit sales, so we made on, let's suppose, 1st of February we made credit sales to Mr. Xavier, $200, and on 2nd of February we made credit sales to Mr. Ali $400. So these are the two transactions that we made. So I'm going to transfer this into the sales daybook. So we'll write down the date here, 1st of February. So we'll write down the name, Mr. Xavier, and we'll write down the amount in the amount column. So same will apply on the next entry, 2nd of February, Mr. Ali, and the amount will comes here. So similarly, we record all the transactions here, like on a daily basis or on a weekly basis, how many sales, how many purchases, returns we are done. So we'll write down here the dates, and we'll write down the name of the customer or suppliers, and we'll write down the amount here. So what do next? How to balance it off. So we'll write down the total, and we'll make the total here, and that will be the 600. If we are going to make the sales daybook, so we'll transfer this balance to the sales account, which means the total goes to the sales account in general ledger. So these two balances will goes to the, this one will goes to the Xavier account, and this one will goes to the Ali account in sales ledger, in which we make the customer's T account. So this is how we make this entries. If we have a two column here, the double column, so that normally if we have any, so what do? We make this here, and we'll write down the 600 here. But this approach is also acceptable by the Cambridge. So you have to make the total, and that you will represent with the relevant account. Like if we are going to make the purchase daybook, so write down the total transfer to the purchases account. So the double entry will be the similar. In the sales account, you will write down on the credit side, and in the Xavier and Ali account, because it's over trade receivables accounts, customers accounts, so that will goes to the debit side. So these are all the formats that we have here. It's this format will goes for the sales daybook, purchase daybook, sales return, and purchase return. We already know that the transfer entry that we made, this entry, the credit, sales, and debit these accounts. So we'll do these entries into the general journal. So if we are going to transfer this, so we'll write down here in general journal. So I'm going to make it for you guys. So we have it here, that will be our general journal, in which we have date again, details. It's the same format that we made and we learned about the double entry. So we have debit amount and we have a credit amount here. So we'll write down the date here, that will be like on 2nd of February, after all the entries that we are done here. So that will be the last date in which we make the total of this daybook. So we'll write down here with Mr. Xavier $200 debit, and Mr. Ali $400, and we'll credit the sales account, that will goes by 600. So this will be the entry that we'll make to transfer this total into the sales account, and these two Xavier and Ali accounts into their individual ledger account. So this will be the daybook format. Now if we are going to talk about the ledgers, so how many types of ledgers do we have? So we are going to know that we have the ledgers. I normally tell my students the ledger is similar to the books in which we make T accounts. So how many types of ledgers we have? We have, number one, we have sales ledger. Sales ledger in which we make customers T accounts, customers accounts, only customers account. So the customers who are have not paid us, mean the credit customers. So customers account, which one? They will be on the credit sales one. So only the customer's account will come up here. So the second ledger we do have is the purchase ledger, in which we make the suppliers account. So the suppliers account only mean the suppliers from which we make purchases. That is also again only the credit purchases will come up here, the accounts of our suppliers. So the next the third one that we will have, we named it with the nominal ledger or general ledger. So in this ledger we make all other ledger accounts, mean the T accounts. So let's suppose in this scenario we have Mr. Xavier and Mr. Ali. The two are our customers. So we'll make their accounts in the sales ledger. So if we are going to make a purchase journal or purchase daybook, so we'll have a credit customers accounts that will come up here. So we'll write down we'll make their account in the purchase journals. And if we have a sales return account, we have sales account, we have purchases account. So all of these other accounts, we have capital, drawings, so all of these accounts will make these accounts here in the nominal ledger. So this is how we make the daybooks, and this is the entries that we'll record in the daybooks, and then we'll have the journal, and then we have the types of ledgers. So this was today's lesson. So in the next video I will try to show you some questions, the question in which we'll have the documents and books of prime entry. So what type of questions can come up in the Cambridge exam, O-levels and IGCSEs. So thank you very much. If you have any question or anything that you would like to ask, you can write in the comments. Thank you very much.